Meaning, Andrew Voda, how's it going?
It's going good, man. How are you?
Yeah, I'm good, man. I'm good. Beautiful day. I don't know how the weather is in Florida, but it's unusually temperate here in Houston.
I was going to say it's unusually chilly here in Florida for this time of April. Usually it's very hot. Today it's
Yeah,
pretty, but I kind of like it. It's kind of nice. Makes
for
life
sure.
exciting.
Yeah. Since I'm become an old person, I'm now going on morning walks. And this morning it was like 58 degrees. And because it's Texas, I had to wear like sweatpants and a hoodie because I didn't want to catch a chill at that temperature. Yeah. Awesome. Well, this is what you guys came for, general weather talk. And that's what's going to happen for the next 48 minutes. Glad you guys are joining. Looks like we got some people watching live, which is awesome. If you've already caught this from 2 weeks ago, we are going to be covering some of the same stuff. So you might find it repetitive, but if you came away from that one looking for some more detailed questions, be sure to ask those in the chat and we'll get those answered more towards the end of this call. So before we kind of like kick off, we'll kind of set what we're going to talk about throughout this, and then we'll kind of dive into it. So at the beginning, we'll do a brief intro from both of us, a little bit of why you should listen to us. And then after that, we'll kind of talk about exit planning at more of a macro level and then kind of hone in with the what and the why and kind of who exit planning is for. And then we'll talk a little bit about some of the key things that you should be focusing on during exit planning, stuff like valuation, and kind of just the big picture stuff around what goes into exit planning. And then after that, we'll go into a little more detail on specific monetization methods and what you can do strategically to boost your value, because ultimately that's what we're looking for here. And then at the end, we'll go ahead and take some questions and take it from there. Anything I missed, Andrew?
I think you got it all, and I'll just say that I will disconnect probably 2 times during this webinar. So be on the lookout for when Alex is having to talk by himself, because I'm going to disconnect. So just throw that out there. Good old home internet.
It's definitely one of our favorite features of our webinars. Also, for everyone who's probably on this, you're probably aware of our director of marketing, Greg, it's I think 2 a.m. or 1 a.m. in Vietnam. He's actually the guy manning the chat. So make sure you blow him up and really make him work for it this early in the morning. So awesome, guys. All right. So to kick off, a little bit about yourself. What do you do at Empire Flippers? A little bit about your background. Tell us something interesting.
Yeah. All right. What do I do at Empire Flippers? We'll start with that. I am the lead seller advisor. Basically, part of the sales team. I help out sellers. Well, I should say potential sellers before they list their business for sale. I'm usually talking to them usually at least a month up to 2 years before they list their business with us, helping them try to get everything in order and do the right things that are going to make them maximize what they're going to walk away with when they do sell.
Cool. All right. And a little bit about me. So I'm the director of sales here at Empire Flippers. So I get to work on both the seller side and the buyer side. And it's my job to basically make sure that both sides have a good experience and that we hit the targets that we set for revenue and getting deals done while, again, providing good experience. So let's talk a little bit about exit planning, because this is something that people throw around a lot. And I don't think that, everyone really knows what exit planning is. So how do you define exit planning, Voda?
Yeah, so defining exit planning, it's essentially preparation. Getting your business in a spot where once you list it, it's going to sell quickly, and you're going to have a business where you're not going to get a lot of pushback from buyers and a lot of negotiations that are going to drive the price down. You're going to be in a position where you can ask the peak amount from your business. So really getting your business in a position where it's going to sell quickly and sell for the most possible. That's how I would define exit planning.
Yeah, and there's always a balance with that, right? So selling for the most amount possible and selling quickly usually are at kind of 2 ends of the spectrum, right? So it's kind of like that whole, it's not really a proverb, but like if you want something done well, it may be expensive and fast. If you want something cheap, it's probably going to be fast and slow. I'm crippling this.
That's a good proverb. That's a really good proverb.
There's some saying around value, and I think everyone gets what I'm saying there. Basically, what exit planning allows you to do is kind of move both of those closer so that you're able to sell for a high amount or a peak value, as well as move the business quickly because you kind of work through the things that people are going to typically have questions around. So, all right, cool. Yeah. Now that we have that brilliant explanation from me, we'll keep it moving. So now that we understand a little bit what exit planning is, why would you want to exit plan outside of selling quickly and selling for the most amount of value?
How about to just sell your business at all? A lot of people think that their business is amazing and it's going to, quickly sell. Buyers are not going to be as emotionally tied up in the business as the seller is.
Yep.
A lot of businesses that just are not really in the position to, sorry, I'm reading chat right now. It's probably a big no-no for webinars, but it looks like Sushi can't hear us. Is our audio good? Anyone know?
Oh, no. We were just making fun of other people who couldn't get their audio to work. Are you still there?
Your guys' audio is fine.
Oh, yeah. Incognito. Thank you.
Incognito. Is that your proper surname? Sick. All right. Now that we got audio, it sounds like it may be on your end, Sushi. Obviously, you can't hear this. And there's Voda freezing with just calling it right off the bat that he's going to leave. At least he's smiling. All right. So like Andrew was saying, one of the big things here is that we want to make it actually saleable. And part of what goes into that is you being honest with yourself around where valuations are. And that's something we're kind of going to dig into. But I think that is a big part of exit planning. On top of that, another reason is it's going to help you build a better business, no matter if you do choose to sell or not. Because what goes into exit planning? Oh, thanks, guys. I can hear Greg telling me. I don't know. I'm not sure what you mean there, Gabriel, but that's great that everyone can hear you. Andrew just messaged me privately and said disconnect number 1. So stay with us here, guys. So yeah, back to why it's important to exit plan. So basically what buyers are looking for is the best business possible. That doesn't mean that you've maximized every opportunity. Usually it does mean that you guys have taken it to a level where you feel like you've gotten to a threshold, you've taken care of all the low-hanging fruit that you're able to capitalize on. Now that's usually a good sign that you're looking to sell. But then we're going to dig into some of the additional facets that kind of go into what you're wanting to do to prepare for sale. And all of those, like making sure that you have clean books, making sure that you have good SOPs in place, making sure that you have processes around different aspects of the business, whether that's ordering inventory or writing content. That's all going to be critical aspects that make you have a better business. And if you have a better business, even if you choose to sell or not, it's a good thing, right? So let's see. It doesn't look like Andrew's back in here yet. So we'll kind of keep moving along here. And let's talk a little bit about who exit planning is for. So if you're just starting your business, or if you haven't started your business yet, you really shouldn't be focused too much on exit planning. And this is a mistake that we hear from a lot of people that kind of fall into this trap. And the reason kind of makes sense, right? Like, you're constantly being pitched on Instagram, and a lot of these ads are geared towards people who are, just starting a business, and that can be great. What you should be doing is you should be focusing on the lowest hanging fruit, actually getting your business to generate profit, because that's what's going to take it to that next level. And any valuation is going to be built around that as a primary. Welcome back. Glad you could join us. All right. So we talked about the why behind exit planning. We briefly mentioned, the fact that you're going to be building a better business when you exit plan. You're going to have the things in place that are going to make you be able to run your business better. And now we're talking about who it's for. And we're talking a little bit about how it's not a great fit for people who are just starting, because really they should be focused on growing their net profit, because any type of business sale is going to be a multiple of that number. So the bigger that number gets, the bigger your valuation is going to get. So outside of that, who else is exit planning for? That's kind of who it's not for. Who is it for?
Put me on the spot here when I get back. Who is it for? I mean, it normally is, you normally have more like deeper conversations with businesses that have more moving parts. Also usually ones that are earning, a large amount of money per month, and they have perhaps $1 million sale or more on the line when they do choose to exit. That's not to say, though, that exit planning can't help out business owners that have a business that is earning, a couple $1,000s a month. A lot of people, this is our bread and butter. We help people sell businesses. We know what the valuations are going to come out to be. We know who it's going to be good for, who's going to snatch it up most likely. That's definitely not the same for people that are, running the business. So just having a call with us, even if your business is earning like $1,000 a month, we can help you out with that and let you know what you need to do to get to a price where, it's going to move the needle for you when you do sell and, make you happy and help you move on to whatever your next goal is. And I don't know if we have a call scheduling link that's available, or maybe Greg's about to send one out with this, but we'll provide you a link so that you can set up a call with us if you do want to further the conversation after this webinar.
Yeah, that's a really good point. If your business is making money and has been making money consistently for 6 months, now's the time to kind of start having these conversations, because you've proven the model, right? You've tested the market, you've proven that you're able to get some good feedback from the market, and now is the time to start kind of honing and optimizing your business. So before we kind of dig in any further here, it looks like we do have some people here in the chat. Anything specific that you guys have around what we're talking about at the very macro level of exit planning? Any questions that you have around that? I'll wait a couple 20 seconds or something for you guys to come in. And if not, that's all good too.
I've done a few webinars since everyone's at home doing webinars. I guess it's kind of the thing to do right now. Everyone wants to hold off to the end of the webinar for questions. And I guess that's a good idea if everybody's doing it. But at the same time, if you have a question, go ahead and shoot right now, because it might just be related to what we're talking about now, whereas later on we're going to talk about it.
Yeah. So it doesn't seem like anyone's got anything right now around this, which is cool. Let's get a little bit more into meat and potatoes, and maybe questions will pop up then. So let's talk about something that people often kind of schedule meetings with us and want to learn more about, and that's about the valuation process and kind of what matters most when we're building out a valuation. So walk us through, Andrew, kind of how our valuations work, and then after we talk about that, we'll kind of pivot into some of the things that can kind of slide it up.
Yeah. Okay. So let's just start really basic here. The valuation formula, how we're going to value any business for the most part. We'll talk about some adjustments to those valuations as well, but at its heart, the formula for valuing a business is you're looking at the trailing 12 months, and we find the average monthly net profit over that time period. We use monthly multiples here, not yearly ones. So we'll take that average monthly net profit over the trailing 12 months, multiply it by a monthly multiple, and then get to the list price. A very simple example here. If you have a business that over the last year, it's been netting let's go with $10,000 per month on average, and we had a multiple of 36x. Then multiplying the two together, you get $360,000. I didn't even have to use a calculator on that one. Woo. So, yeah. So $360,000. That's, a simple and quick way to value a business. Does that make sense to you, Alex?
It does make sense to me, Andrew. Thanks. And I think one thing to note about that is the reason why we use monthly multiples, because that is a bit of an outlier. It's something that buyers are sometimes taken off guard about. Sometimes sellers are as well. I've actually had buyers come to us and say, like, I checked out your website. It looked really impressive. You guys had a lot of great listings. And then I saw you were listing businesses at 40x, and they assumed it was annual, which is kind of odd. Like, all you had to do is just look at the profit and then see that, like, clearly that's not an annual multiplier. But the reason why we do that is because it allows us to have more precise valuations. And our valuations are built around, they actually have machine learning in them that take into account the thousands of valuations in businesses we've sold in the past, and use the different factors that we're going to talk about to help build out a range to price these businesses. And it's proven very effective at actually getting us to sell these businesses and get a great deal for both sides. So now that we've kind of covered that, let's talk a little bit about what goes into kind of moving that multiple on the higher end. So I mentioned that the way it works is it generates a range, and that goes from obviously a low end to a high end. So how do we get from the low end up to the high end?
Yeah. So getting up to higher multiples, just boiling it down here, think of your castle. How big is the moat around your castle? You have a business that's 5 years old. It's growing year over year over year. You have some trademarks. You have like a patent in place, repeat customers. This is kind of across all different, business models here. So we're not, I can, narrow it down into each specific model as well. But really, is your business one that's been around? It's kind of stood the test of time more, and it has, more potential and more clear growth avenues and opportunities. On the side of the coin, let's say a business gets a 24x multiple. Maybe it's one that's earning only $500 a month. It's about a year old. Maybe the owner is having to do a fair amount of the work themselves. Those are all some examples of what's going to get you towards a higher and lower multiple. There's some other examples, but at the end of the day, the largest things are age, the trajectory of the business, the work required, and how much the business is earning every month and year. Alex, you think I missed anything there?
The only thing I would say is like monetization method can have a factor into this. And the reason is because some business models just have more inherent recurring revenue. And that's one of the biggest ones. So people always like to point to SaaS valuations. And they love to try and compare their companies to something like an IPO from Uber or Twitter or something like that have absolutely insane multiples. And the reason why those companies have insane multiples is because they have insane hypergrowth and they usually have recurring customers. So if you're able to have both of those, it is going to slide you up, but don't expect, the same realm of multiple as a Silicon Valley sweetheart. But getting up to that 5-6x annual range is definitely possible for extremely special businesses. But I would say on average, you're looking at something in between 2.5 years to 5 years on the average. Would you agree with that?
Honestly, I need you to repeat the last part again. I got a little distracted. I don't want to say I'm going to agree to. What did you say? 2.5x was average?
I said on average, you're anywhere between 2.5 to 5 years for where a business is typically going to lie. And obviously, that's going to be a bell curve with most of the businesses kind of being in between, closer to that 3 to 4 year range. I think that's something you'll see on the marketplace. Good to know that you're continuing to pay close attention. So Sam asked a question here. Greg has decided now is the time for us to answer this question, which is great. In your P&L documents, why do you not include human capital costs, e.g. VA support, et cetera? So this is a little bit of a weird one. I think we do. I would be surprised if that wouldn't be in there. So anything that needs to be included in the profit and loss statement for you to continue running the business at the current expected revenue and to get the same results that the seller's currently having should be included in the profit and loss statement. There are cases where add backs are applicable, and that's something we'll actually cover a little bit later into the webinar. But that's something that should also be very explicitly documented as far as what's being added back in the profit and loss statement. So Sam, if you have a specific example of that and you're working through reviewing a profit and loss statement, hit us up and we'll kind of dig into that a bit more.
Yeah. Sam, feel free to follow up too and just let us know what business you have. We can tell you typically what the expenses are going to be for that as well.
Yeah, to be clear, definitely don't do that publicly because we are, as you know, probably if you're reviewing business in our marketplace, very protective of seller information. So let's do that privately. You can email me personally, alex@empireflippers.com, and I'll take a look into that. Cool. So there we go. I guess it's question and answer time, Greg. How will the Amazon Associates changes affect valuation? Should I sell now? The question of should I sell now is almost always one that's personal and you're going to have to answer yourself. So I'm just going to cop out immediately and say that. But it really just depends on your circumstance, right? If you're saying, should I sell now because I'm able to capitalize and get as much money as possible because I'm going to start making a lot less money, that's not going to work because we're going to reprice that. And we're going to reprice it based off of the new charts that go into how Amazon Associates are going to make money. Actually, why don't we take a step back because maybe not everyone's aware of this. I know this is a pretty big shift for people who are in the affiliate space. Andrew, can you kind of like lay down what happened and what's going on right now, where this question's from?
Yeah, it was a dark week. So Amazon changed their payout rates for Amazon associates. Um, people that have like review sites, for instance, if they refer people to Amazon, they, a website visitor clicks on a link, they go and buy like a household product. That commission used to be 8%, and now it's down to 3%. Several categories were affected. None went up, so they all went down. So a lot of these website owners and operators, they might have been selling products and making an 8% commission on it. And now all of that has gone down more than half. It's down to 3%. Again, it's different per category on Amazon, but at the end of the day, what happened was Amazon cut how much they're paying Amazon associates. So a lot of these websites are earning less money right now.
Yeah, and just to kind of like briefly talk about this a little bit more. So one thing I thought was funny is Amazon hit a record high the day that they released this as far as the stock price goes. So like that just goes to show that like Amazon is going to make calculated decisions that best influence the company. So at the current time, they feel like everyone's using the platform and they made adjustments to their referral traffic that they felt they could justify and make happen. Which what sucks about that is obviously it impacted a lot of people who do make a good living and have websites and assets built around the Amazon Associates model. But the good news here is that doesn't mean that the business, let's say it does cut 50%, that doesn't mean that the business is worth 50% less to specific buyers. Now that is going to be how we have to value it because that is a reality if you do not make any pivots. But there are other options for you to leverage the traffic that you currently have, like going to other affiliate offer providers. And there's hundreds of those. And there's going to be some that are very specific around like whatever your niche or authority site may be focused on. And this is something that a lot of the, I don't want to use the word guru, but a lot of the guys that make a lot of money in the affiliate space, they've been diversifying over years and have part of their portfolio of links that point towards Amazon and then another part that focus on maybe a smaller affiliate where they are getting higher commissions. And the more traffic you have, the more authority you have to negotiate with some of these smaller affiliate providers and get that revenue back up. So as it always is, when one door closes, I'm full of proverbs today. As one door closes, another door opens, and there's additional opportunity. And one thing that I did see kind of being talked about, actually from a previous customer of ours who had a very large affiliate site, he was talking about how having a portion of your links that do point to Amazon can still be worth it because in his specific example, there's so much like actually additional cart purchases once they reach Amazon outside of just the actual thing he's linking towards that it's worth it for him, and his affiliate commission on an apples to apples comparison is actually improved. So great question there, Incog. And
let's just and to answer it again, like we backed up, we told everyone what was going on with Amazon Associates. Is now a good time to sell your site if you have an Amazon Associates website? Get your opinion after mine, I guess, Alex. But what I would think is probably it's probably not the best time to sell. You're likely going to have it revalued, and the earnings from previous months they're going to be prorated with how much you'd be paid out right now. So if I were in your shoes, I would look into these other affiliate programs. And, it can be a bummer if you're thinking about selling in the next month or so, but see what other affiliate programs are out there. A lot of them will have higher commission rates than Amazon.
Yep.
Switch them up, replace them, and see how much money you can earn from these affiliates. You might be able to have a business in a few months that earns more money than it did with Amazon. But like Alex was saying, when people hit Amazon, they buy pretty quickly. So it's not going to be like a one-to-one trade-off there. There's probably going to be a few less conversions, but nonetheless, I would give it a few months and work on it to change those affiliate links out to another program.
Yeah. On top of that, I would just kind of circle back of it always depends, right? Like, what are your goals? If you're looking to get a cash infusion now and selling a site does that for you and allows you to focus on something that you're more passionate about or is going to be a better revenue generator for you, then it's always a good time to sell. It may not be the optimal time to sell in terms of what you're going to get from a valuation perspective, but that's something that you have to weigh, and that's something you can talk with us about as well to see really where that's going to boil down to. Because buyers are definitely going to be looking to acquire this if their specialty is around, taking these to alternate affiliates. All right, cool. I'm really liking these questions. This is a fun way to do this. So if you guys have some additional questions, Gabriel, Sushi, Mike, that would be great for you to throw them in here. While you're thinking about those, we'll kind of continue to dig in and talk about some of the specific things you can do for, let's go with FBA content. And then we'll briefly touch on SaaS, on what you can do to optimize your value for those. So why don't we start with FBA? First, tell us what it is for those of us who don't know.
Yeah, FBA, fulfillment by Amazon. So this is where people are selling products on Amazon and they actually own the product. They've created a brand. They're selling, in the US or wherever Amazon is, whatever market they're in, if they've expanded there. And the key thing about Amazon FBA that makes it cool, and why a lot of e-commerce sellers are using it, is they don't have to store the inventory in their house. They don't have to use a warehouse. They don't have to ship it. The inventory typically or can go straight from somewhere like China to Amazon's warehouses, where the seller is never having to touch the inventory, and then Amazon ships it out for them. That's
so
summarize FBA at this moment in time. What about you?
Yeah, I mean, agreed. The only thing I would say is it doesn't necessarily have to be a private label product, right? So it could be you sending in something that's like branded, like this delicious Zevia soda, and you sell that on Amazon. Yeah. The reason I have this is because I didn't feel like going into the large grocery store with all of the weird lines and stuff in place. So I went to this really like crunchy granola store, and this is like the healthy soda. But yeah. All right, Gabriel, and a profile photo. I love it. How would you prime a digital service business for exit, e.g. a marketing agency? Okay, cool. I guess Greg doesn't care that we were talking about FBAs, and he just is like, let's go into this one right now. That's a great question, Gabriel. So first things first, you need to try to productize your service. It's really difficult to sell a service-based business unless it's a productized service. So we've sold marketing agencies before, web development agencies, but the ones that are successful have very clear pricing, and they're not doing custom solutions. They're not, because that's a skill that's really hard to transfer over to anyone but another agency owner. And the other thing about that, it's really hard to have predictable revenue. So anything that you can build in there, whether it's hosting, whether it's monthly updating, ad campaigns, like that's the kind of stuff that's going to make an agency a lot more kind of interesting for a buyer. And I actually come from this background. So I ran a conversion rate optimization company for a long time. So I know some of the pains that go into making this a reality. But the fact of the matter is, it's very difficult to sell a marketing agency that does a lot of custom work, that you're quoting, one guy $10,000, and then the next month when you're hungry, you're quoting $2,000 to a new customer because you're just trying to get some business in. So you got to make your business as predictable and as repeatable as possible. And then you have to have the team in place that's going to come over with the business. So whether that's virtual assistants, contractors, whoever it is that's going to actually do the work, that's going to be critical. And then on top of that, you need to have a dedicated way to have inbound leads. That's what's so hard, because oftentimes when these agencies go to sell, the owner is the person who is doing all of the revenue generation on getting new leads to come in. And that can be difficult. So if you do have a marketing agency and they focus on Facebook advertising, you've got a team in place, you've got a lead funnel in place, and all of that's kind of built out, and it's working well, and it's doing well, that's absolutely something we can sell. Does that kind of answer your question, Gabriel? Let's see. You have a follow-up here. So aside from having long-term contracts in place would be pretty tough, low multiple, I'd imagine. Yeah. Typically service agencies are going to be on the lower end. It really depends on your trends and growth rate as well. Doesn't mean it's necessarily, 1X or something like that. That's what a lot of agencies get acquired for privately. But we've sold agencies north of, 2 years, I think closer to 3 years. And that was a while ago too. So if you have any follow-up questions on that, feel free to ask it. Looks like we have another one here. Greg. Cool. Glad that makes sense. All right. Another profile photo. Cool. Web Life Solutions. Shout out Web Life Solutions. Do you pay attention, Voda? I can already tell you're drifting.
I already know the answer.
Oh, I didn't read it. Why don't you go then?
Yeah. All right. Sure. So the question is Greg's been making us repeat the questions. I don't know if we've been doing that so far, but I'm going to do it.
Feel
So
like I definitely
Amazon sellers, FBAs, so FBA owners could benefit from Amazon affiliate site traffic. Yes, I think that they can. I think that now is could be an interesting time too, because if there are sites that are still earning all their money from Amazon associates,
Yep.
and the category that they're selling products in has decreased, then their business is earning less money per month. It's still going to have the same traffic as it did before this change came in. There's still going to be the same amount of people coming to this website, give or take. So the business itself, the website itself, is going to be, valued a bit less today than it was 2 days ago. So you could be buying that same amount of traffic basically for a lower price than last week.
It's super big for you, right? Because like you can buy one of these that theoretically, like Andrew's saying, are at a discount. Maybe the seller, it still makes sense for them to sell right now. And then you point that traffic to your product and it makes no difference to you. You're literally still continuing to sell through FBA and making it happen. Good question.
I'd say you're in a very good spot as an FBA owner. It's a lot of our FBA buyers and sellers. I don't think they actually run Amazon Associates websites themselves. I think this is a good time to get into that space. And, you could just replace a lot of these products, or these websites have product reviews and it's like an ordered list of, like 10 of them or something. You could just replace the number one product with your own product. You have all this traffic coming to the site still, could increase the sales that you see on with your FBA business.
Yeah, absolutely. Sorry, I got a little distracted there. We just had a sale come through. We just sold another business, which is always cool to see come through. But I was also looking to help answer this next question from Robert. So if you want to put that on the screen here. All right. No profile image. So you get less respect, Robert, but welcome to the webinar. This is a good question. Do you guys have any suggestions for alternative affiliate partners? The Amazon change has screwed my portfolio hard. Yeah, man. We've definitely been talking to a lot of different people around this, and I hear you. It's always tough to wake up and see that kind of an adjustment. To answer your question, there's a lot of them. I think this is something that we're going to be kind of writing some content around here. I think Greg's working on something like that. But just like off the top of my head, share sale is a big one. Commission junction's a big one. AventLink is another big one. Rakuten, I would definitely suggest this. So I actually started using them. I know they're big on the West Coast, but I started buying some stuff from them as well. Recently, they've been doing a lot of advertising. They provide a really good experience and their pricing is good. So I would, if you have a product that they sell, I would definitely take a look on there. Just a couple more like quick ones, impact.com has some, Awin, Etsy has some, there's a lot of them out there. Just start searching, and I imagine you're going to start seeing more and more content around that. So hopefully you'll be able to find them that aligns with your portfolio. Andrew, anything to add to that?
Yeah, Robert, sorry to hear about that, man. It's been a crappy week for people in the content site space for the most part. So I've seen some lists going around on like social media groups, just digging that I've done myself. So we should put together something like a chart. Greg,
it looks like Greg was ahead of this. We should have known better. Yeah. So empireflippers.com/best-affiliate-networks-programs /close/leaning/ what is that called? Kind of backslash.
Yeah.
Backslash.
I got you.
Dash.
You're better with Proverbs. You're better with Proverbs.
Excuse me?
You're better with Proverbs.
Correct. There is an ancient proverb that says a link that ends in a backslash loads fast. Oh, what up? Brought a cat to it. I'm going to cripple that name though. Andrew, you want to give that a shot? Carly Mids?
It's better than what? Yeah, it's
right.
Good.
Okay. Welcome. Thanks for the question. It is a /. We're idiots. Okay. Thanks, Greg. What's the lowest price e-com business you consider selling? Andrew, I'll let you answer this one.
Yeah, so it goes back to the minimum that we accept, and that our requirement for a business on the lower end is one that earns at least $1,000 net profit per month. That would be on average over the trailing 12 months.
Yeah.
That's for an business, since you're asking about an e-commerce business. Those of you that do have affiliate sites like Amazon associate sites, AdSense sites, a simple content website, the minimum is lower. It's $500 net profit per month. Again, just to answer your question, $1,000, that would need to be the absolute minimum net profit per month over the trailing 12 months for an e-commerce business.
For an
usually,
e-com.
yeah, evaluation is going to be somewhere around the really low end, like $18,000 up to $25,000, $26,000, $30,000 maybe.
Yeah. Yeah. And the good news here is if you do have a business that's at that lower end of the market, that's going to move really quickly. I don't know if we have a lot of British people here on the call, but multiple use of chaps here from you guys. Good to hear our brothers from across the pond chiming in. Yeah, so keep in mind that we have a massive buyer pool for businesses that are priced below $50,000. These move really quickly. Sometimes we'll get multiple wires in for full list price within 20, 30 minutes of a listing going live on the market. So don't think just because you have a smaller business, you're going to have a smaller buyer pool for that. Actually, that's I would say the largest buyer pool, just because more people have 50 grand to spend on a business than 5 million. Cool. Another question. Oh, 2 more questions. All right. Can you guys explain? Yeah, cool. Sam, welcome back. Could you guys explain anything about SBA backed buyers versus cash backed? Is there anything I should be wary of? Yeah, so that's a good question. It's one we get a lot. I don't think wary needs to be the word, but what I will say is there's 2 big things. One, that the buyer's already been SBA pre-qualified, and 2, that your business has been SBA pre-qualified. If you've gotten to that part, then it's an avenue that you can consider. What I would say from there is cash is king. And if you are willing to do some sort of seller financing, sometimes SBA deals will have some sort of seller financing attached to them as well. Oftentimes a cash-based deal can still be and is usually a better deal because it's a simpler process. You literally have to give blood for an SBA deal to go through, at least on the buyer side. And that's because they're wanting to verify, for the life insurance that's getting processed. So it's a long process for an SBA deal to go through, but it doesn't necessarily mean that it's a bad one. What I would say is I would heavily weigh and consider selling cash first and then pursue SBA options down the line. That's not always the case, but that is something that we've found to be true through our marketplace. So hopefully that helps answer that question there. Robert, for when or if my business is, let me reread that because we're breaking these into clips. For when or if my businesses recover and I want to sell with you, how long does it take to sell with Empire Flippers? Great question. We actually have statistics around this, and it's something we're pretty proud of. Andrew, I'll let you answer this.
Yeah, well, we have an industry report that we just released about a month or 2 ago, and that was taking all the data that we had from 2019 and breaking it down by business type. And we, included, among other things, details like what was the average amount of time it took to sell a certain business type, like a content site or an Amazon associate site, since that's what you have, Robert. So overall, though, to be a little bit more specific to your situation, since I'm fairly certain that you have a portfolio of Amazon associates websites, depending on the price, let's just say it's valued less than $250,000. We can usually sell them fairly quickly because we have such an established buyer pool for those types of businesses. It's not uncommon to see a business be listed, and we list our businesses on Monday mornings. It's not uncommon for us to list a business on Monday and then it's sold by the end of the day. And that's not just like a $20,000 business. That'll happen with 6-figure businesses very often. Yeah. But to be conservative, it could take anywhere from 30, 60, 90 days. It's a little hard for me to say in your case because I don't know everything about your business, but this is a great example of a question that if you set up a call with us, you can tell me some more information about your specific site. I can even look at them if you want me to do that, and I can give you some more accurate information there.
For sure. But definitely download that industry report if you guys are at all interested in this. And then, yeah, Greg will put the link in again. Richard's giving Greg some love on how quick he is to respond in the chat. Greg does have some fast fingers. Let it be known, though, I beat him in typing contest every time.
Prime time for Greg.
Yeah, it is. This is when Greg really starts waking up, 2:40 in the morning. All right. What other questions do we have? I feel like these are much more fun.
Yeah. What's up, Richard? Hope you're doing good.
Yeah. Good to see you.
Where do we even leave off? Yeah, dude, this is way more.
Yeah.
Everyone was bummed out on the last webinar. Everyone thought they might have COVID. It was a dark time.
Yeah. Yeah. We did a similar webinar 2 weeks ago, and it was very much just around COVID. It is good to see that there does appear to be some light at the end of the tunnel there. So going back to what we were talking about what we need to do. Oh, question.
Oh, yeah.
Curious to know, have you guys handled partial equity deals? The answer is yes. We've done that multiple times. It really just depends on the business. Again, typically this is going to happen, closer to 7 figures and north of 7 figures for sale prices. Oftentimes buyers aren't looking to come in and buy a $300,000 or $400,000 deal and have equity involved. However, that doesn't mean that they don't want the seller to have some skin in the game, but usually the way that's done is through seller financing. But yeah, we can handle that, and it is something that does happen. Just know that if you do choose to sell on Empire Flippers, you do need to be willing to sell at list price for all cash on our market. That is something that we talk about with you, but that's just in case someone does want to just pay list price cash. Cool. All right. Yeah. So a little bit more about like what you need to do with FBA, and then we'll let some more questions kind of fill in. So you kind of defined what FBA was. What do you need to do to make that business more valuable?
Yeah. Well, beyond just, growing the business, running it for, more years, getting more sales and data in the books, making sure that your inventory fulfillment and supply chain is optimized. It's in a place where you haven't turned your house office into a mini warehouse. You want to make sure that the inventory is going to Amazon's warehouses or 3PL, and it's handled smoothly there. A host of things that are going to really eliminate you from a lot of the roles in your business that are going to make you work 40 hours a week. Our buyers are looking to buy a business that's not going to be a new job for them, whether it's going to be a full-time job. Some of the other things there are getting your books in order. To value your business, we have to know how much money you're earning. What are you spending money on? Buyers are going to want to review that too. If you are a little confused about your numbers, that's okay. Our vetting team will help you out with that. But ideally, you want to have your books in order before looking to sell your business.
Yeah.
Besides that, since we don't have a ton of time here, really just minimizing work, getting processes so that, again, I feel like this is a broken record here, but trying to spend less than like 10 hours a week or so on the business. Alex, what do you think? Anything I missed there?
No, I think that's good. The larger the business gets, the more tolerance there are from buyers on how much time you're spending on the business. But you should always be looking for opportunities to outsource things that you're working on to people who can handle it ideally better than you for a lower cost of time for you. But yeah, I think that makes sense. Let's talk a little bit about content sites in general. So we talked a good bit about the changes that Amazon Associates has gone through. And to be clear, I still think this is a great investment for people. I know that there are shifts being made, but like I said, that doesn't mean that you don't have a valuable asset. It just means you're going to have to pivot on how you're making some of your revenue. So let's talk about content sites. What do you do to grow the value there?
Yeah, usually to grow the value and make more money with the content site, you're producing more content, you're targeting different different product lines. So you're essentially selling more products on your site. So cover more topics, and really in doing that, make sure you're not writing all this yourself. Buyers are not wanting to purchase a site where the previous owner was this amazing writer, and then once that site is transferred over to the new owner, seller in the right one. So having a writer that's doing this, having your processes in place where when you know there's some more products or more keywords that you want to write around, you can just outsource that to a writer, give them the instructions. So they start writing more information about, or just more information for you. And then beyond that, with content sites, still a huge strategy is to get more backlinks. So a really big way to grow the site. Have more websites that are referencing or linking to your site. And, documenting how you're doing that. Are you going to a link service, paying them for links? Are you reaching out to other websites yourself? Make sure you can instruct a new buyer on what your process is there.
Yeah, and just to kind of further add there, like talking about the backlink profile, if you are using something like a PBN or something, that doesn't mean that the business isn't sellable, but anything that you can do to start making that a little more white hat is going to typically be appreciated, especially if you don't see an impact on your traffic. So if you can start gradually replacing some of your more gray hat links with pure white hat links, that can be helpful. And then the last thing I'll add there is, I'll add two things. One is, if you are writing content around something that's very specific, like we've had sites around like organic gardening, and we've had sites around just like very detailed niche knowledge that the seller was writing, those are going to be especially the hardest to sell if you're writing the articles yourself. So find someone else who's willing to write those. And even if you're having to pay them a premium compared to a typical writer, that's going to make the business a lot more sellable. And then the other thing, I guess I'm done. No, that's fine. The other thing wasn't that important, honestly. So let's just focus on this next question here. So do you need to have a US registered company to acquire a business on Empire? The answer is no, you do not. These, for the vast majority of our sales, are asset transfers, and you do not need to have a US registered company. You may be required to have a US company for certain business models, like Amazon FBA or something like that, but that's something that we would talk with you about through the migration process. We got another one here. All right. Andrew, I'll ask it, you answer it. Do you count number of subscribers to value an Amazon associate site, or just focus on profit?
Yeah, so number of subscribers, I'm assuming that you mean the number of email subscribers that you have. It is attractive. However, let's kind of break this down a little bit more. Are you doing anything with those email subscribers? Do you have a list of 1,000 email subscribers and you never send any email out to them? It's not really something that is going to make a buyer pay far more money just because there's 1,000 more emails that have never been touched or contacted before. If you have a process in place where you're sending out emails to them, they're coming back and buying products from you, and you can show that on your P&L, then that's something that would be reflected in the bottom line number. So it will make your Amazon associate site more valuable. I'd also argue that if you have a process like that in place, that's really well automated, you know exactly what you're doing with email marketing, you can teach that to a new buyer. Not only are you going to be earning more money a month, but the multiple on that site will grow compared to one that is just an Amazon associate site with no emails at all.
For sure. What buyers want to see, and the only way that buyers can really know if those email addresses are valuable, is if you're leveraging them to produce revenue. That's when that's going to make sense. So you said subscribers as well, like social media subscribers. Okay, similar thing. Like you need to be able to prove sales through social media. So if you're able to post on Twitter or post on Pinterest and get a large amount of sales from that, and you can track that through analytics, that's when they become valuable. And we've definitely sold sites that leverage social as their primary source of traffic. I will say you better really have a process in place for making that repeatable, because that is something that a lot of buyers don't have expertise around. So if you are absolutely crushing it through Pinterest, you need to be able to transfer that information over and make them feel confident that they can repeat it. Good question. All right. Other than traffic / revenue trending up, what's the best way to get a top multiple? Cool. Andrew?
Yeah, still talking about, I'm assuming, Richard, you're talking about Amazon Associates or just content sites in general. Age of a business definitely plays into it. Besides traffic and revenue trending up, this week is a great example of a way to have a site that gets a higher multiple. Some of the websites out there, they're not just relying on Amazon Associates to make money. They have deals with other affiliate networks. For example, in the pet space, Chewy is really big with animal sites. So you have your earnings spread among not just Amazon Associates, but other affiliate networks. Maybe you've even gone as far as to negotiate higher rates with those other affiliates. That's something that's going to pay dividends on the multiple. You're not relying just on Amazon for your money. You've diversified. You have affiliates where you can maybe call and actually talk to them as well. You're not going to get that in Amazon. That is a great example of just this week, something that you're probably going to see buyers paying a premium for because they feel safer with diversified income.
Yeah,
That's
and I like.
But you.
Yeah, I like how you worded that. So, like, what's the best way? And I think what Andrew was alluding to is risk mitigation, right? So, any possible kind of actions you can take to mitigate risk for a buyer, like building in redundancy on the content side, building in redundancy on the link building side, building in clean backlink profiles. That's going to be what bumps you up in the multiples, and that can take time. It's things that typically take either cash or a lot of sweat equity. Yeah, cool. All right, we got a few minutes left here, guys. Why don't we talk a little bit about the pitfalls, and we'll kind of end with that. That may be a little negative, but I think it's useful. So what are a couple pitfalls that people do before they go to sell that aren't actually hugely valuable?
Okay. I feel like I'm going to start talking. Greg's going to cut me off with a question.
Yeah, for sure.
Yeah. What was the question again? I already forgot.
You're just the worst at listening. So we talk with a lot of sellers, and we see that they hit some pitfalls that they are placing some artificial value on. What are some things that people typically think are going to really influence the value of their business, but actually don't?
Yeah, you could probably guess where I'm going to go with this. And it was already alluded to by another question asker, is building out like every social media channel that you possibly can. So we see this a lot where people are holding off on wanting to sell their business, or they think that an Instagram or Pinterest or Snapchat or what have you is necessary before selling their business, or it's going to dramatically increase the value of their business. It's typically not the case. I'm not saying that's a bad idea to build those out. What Alex said earlier, though, like if you have a strategy around social media, a lot of buyers do not. So you really want to have that strategy well documented so that that process can seamlessly go over to a new buyer. If you've never explored interest, Instagram, Facebook marketing, and you want to sell quickly, it's really not the time to go into it and try to spend a bunch of money to grow your business somehow through those social media channels. Play around with it if you're looking to sell in the future, but if you're looking to sell quickly, I wouldn't bother with it.
Yeah.
Alex,
I'll just add one more, and that's, when you get to the larger size businesses, having an accountant go through for months and audit your profit and loss, audit your books, that can be really helpful. But oftentimes, a 95, 98% accurate picture is enough for a buyer, because they're going to view things differently than maybe a traditional accountant would. Everyone structures financial data a little bit differently. So I would definitely say come and talk with us, because most of the time, unless you have one of those fringe businesses that have very complicated revenue streams, we're going to be able to help you get the data in a very presentable way that is accurate. So come and talk with us, and we'll help you work through getting an accurate picture there. We're a couple minutes out here, guys. What I will say is, from the questions that everyone asked on here, anyone that asked a question in the chat that hasn't talked with one of our seller team members should really do that. I think you'd find a lot of value, especially if your business meets the minimums of Empire Flippers and you're interested in getting it sold. So the link is here. I was going to say, for those of you who are just listening, I'll read it out, but that doesn't make any sense. Everyone sees the link here. Go ahead and do that. I think you're gonna find it to be a fruitful conversation, even if you are, a few months away from selling your business. Anything that you'd like to add, Andrew?
Yeah, just if you have any questions about this, don't worry about if you think maybe you shouldn't schedule a call with us, or your business isn't in the place where you should be able to start talking exit planning. I'd rather talk to people 2 years before they sell a business instead of a week before they want to sell it and it's not prepared to list at all.
Yeah, and they have horrible expectations to what's actually going to happen.
Yeah.
Cool. Awesome. Well, if you guys don't have anything else, I guess we'll go ahead and wrap it up.
You could go play your guitar after this, Alex?
Yeah, if you guys stay on for another 30 seconds, I'm going to be riffing to Oasis Wonderwall. So your call. All right, guys. Thanks for joining. And yeah, don't hesitate to reach out. Like Andrew said, we're honestly here to help. So talk to you later.